What's up, guys? Woods here. Hope everyone's had a good couple of weeks. It's been a few weeks since I've posted a video on YouTube, so I want to come forth to you guys with a supply lesson. I'm going to conclude my supply and demand series. So far, we've gone on about demand. If you haven't watched the series, make sure you do. I posted a video on how to seek demand, how I play them, as well as playing OB flips after the demand slice through, and demand anticipation in my strat with that. Make sure you guys check that out before watching this video. This one will conclude the series. So basically what I'm going to do is I'm going to have about a 2-3 part series on supply, how to seek supply, how to play it, playing OBs after the supply has been sliced through, and playing supply anticipations just like you would play the demand anticipation. So like I said, make sure you watch those videos before you watch this one. And we're going to start the series off by just looking on how to seek a supply zone. So what is a supply zone? Okay. So just like support resistance, you have your support where you look to buy, you have resistance where you look to sell. Supply and demand is the same concept, but you have demand where you're looking to bid for a move up, or supply where you're looking to bid for a move down. And I'm going to show you guys how to seek supply zones right here. I'm looking at ETH right here. I'm just going to take the replay button right back to around here, and I'm going to show you guys how a supply zone is formed. So how's a supply zone formed? Well, you get a move down here, right? You get a move down. You get a little bit of support to hold the price up. You get your supply zone forming, then a move down out of that supply zone, confirming the supply zone has been created. So like demand zones where you would look for, let's say, for anybody that just needs a little bit of an example just to show you guys, right here, you get a move up. You get a little bit of resistance to hold that price down. You get a move up out of that demand zone, creating your demand zone, right here. So that when the demand zone taps, you get a beautiful re-entry and then a move up out of that. Supply zone is the same thing, but the opposite way around, right? You get the move down, you get a little bit of support to hold that price up, and then you get your supply zone print with a rejection directly out of that supply zone, thus creating that supply zone. So what are you going to do when that supply zone comes? And retest, right? You're going to take out your rectangle. You're going to draw your rectangle within the wicks of that supply zone because you want to cover the wicks as well as the candle closure. And then you're going to put a little bit of your entry at the bottom end, a little bit in the middle, heaviest to the top, because you don't know how that supply zone will react when it gets retested. And it might not even get retested, but that's the whole point of leaving your bids up, so that when it does get retested, you have a beautiful and safe entry with a good invalidation, right? So on my demand invalidations, what I would do is I would measure that supply zone, and that's a 0.7% zone. That's a beautiful zone to play, right? So if you watch my demand zone lessons, you know that I like to play anywhere from 1% to a 3% range. That's a beautiful demand zone to play. Supply zone, you would take the same tactics you would use for demand and just play it the opposite way for supply. You don't want to overcomplicate it. It's the same concept flipped. As opposed to taking longs here, you're looking to take shorts. So this is a 0.7% range. That's a very tight range, meaning that you could give yourself a 2% invalidation. Really, you don't have to give yourself that much of an invalidation. You give yourself a 1.5%, but to be safe, we'll just do 2%. Anywhere from a 1% to a 3% validation is good in my book. Anything over that's playing a little bit loose for my standard, but a 5% risk invalidation, depending on your risk management, really is how you want to play it. But there's a 0.7% zone. We don't want to overcomplicate it. If the zone gets sliced, it's technically not valid anymore, and then we would treat it as an order block. So now we just want to treat it like it's not going to get sliced through. So we're assuming a reaction like this. If it comes back up, we're assuming that it taps and rejects right after that. That's what we're looking at for a clean play. And obviously we know what happens in hindsight. So we're going to let the price action develop and see how it reacts when it comes to the zone. It's going to chop around. .7% on a 2% validation. That's a beautiful return. Not saying every player is going to play like this, but this is just a good example on getting your foot in the door of playing supply zones. All right, guys. So I'm just going to kind of scroll through the chart now because you already understand the concept of demand, right? You should. And now you understand the concept of supply after looking at that last example. So what I'm doing is I'm just going to scroll through the chart and show you guys examples of supply. Let's say a supply doesn't work out, right? So not every time is the supply is going to work out accordingly. So let's say like right here, you got a move down straight through your demand zone. So it's sliced straight through your demand zone right here, right? The demand zone did not work. Now you're looking at this and you're saying, okay, now I got supply. So I know to put my bids within the supply zone when it comes back to test. Right? So now you see how we come back up, we almost retest, we come back down, and now we're going to look to flip it. So as soon as we get candle closures within the supply zone with a flip back down and higher or low within the price, now we're looking to flip it. This to me is a good reaction to say maybe I shouldn't be looking for a short as much in the supply zone. Even though it is a supply zone, it might work. You can see right here the reaction that's coming from it. You'll eventually have profit right here on this rejection, but then it'll look to flip back up with a higher low. Look for triggers to get out of that supply trade, or maybe look for a flip to long it. So this would be a good example of a supply zone that slices through and then flips into an order block here, right? So you can look at this now as an order block. So you see right here where we get this initial push in, right? And I said that higher low is a good trigger to maybe say, let me get out of that play, right? This is on the higher time frame. This is the 4 hour. If you're in this trade and 3, 4, 5 4-hour candles begin to trade within that supply zone, maybe it's a good sign to get out of that play, right? We have the previous range high right here, that previously acted as resistance looking to flip. We're consolidating directly under the supply, printing a higher low. It's a good sign to manually close the trade, maybe take a little bit of profit you came from it, or break even or slight loss, whatever the case may be, before you take that loss. It's okay to take a loss. It's not a bad thing to take a loss if you're playing your trades accordingly. But when you see signs to get out of a trade, just like when you see signs to get into a trade, when you see signs to get out of a trade, get out of that trade, right? So it's the same concept when you're looking for triggers to get in that trade, opposite way. You're looking to get out of that trade. This is a good example of a supply zone. It didn't play out accordingly. You just closed the trade, no loss, and then after the flip back up and the close over, you now know, okay, when it comes back up, I'm looking for a long within that zone that I was looking to short. That previous supply is now acting as an order block, trade for a long, just like the OB examples I explained in the demand lessons. All right, guys. So I just want to take a look at a more recent example for ETH. So, I mean, obviously we've been trading in a very choppy range, and way back in April, so about April 19th, right there, we had a supply zone print right here. So again, how's the supply zone created? What are we looking for, right? We got a move down, followed by a little bit of support to hold the price up, followed by a rejection thereafter out of your supply zone, thus confirming it, right? So you're going to take your rectangles, you're going to draw it from the bottom of the wick to the top of the wick, and you're going to look for the rejection thereafter. So now, after that rejection, you're going to look to bid for a short within this zone. So you're going to put a little bit at your bottom, a little bit at the middle of the zone, and heaviest at the top because you don't know the reaction that will come from it. And you're going to measure your zone. That's about a 1.8% supply zone. It does not get better than that. That's a perfect supply zone. So your invalidation is going to be what? About a 1.8 to 3% risk, depending on your risk management. You don't have to go much bigger than that, because remember, after your supply zone is sliced through, it's invalid. So you're going to look for it as an order block. You're going to treat it as an order block. Yeah, so that's how we're going to play it. And I would do about a 2.5 to 3% raise. Let's just do a 3% raise to call it that. I mean, that's just a beautiful play in my opinion. And sufficient target would be for these lows right here. So let's just see how it plays out. Obviously, we know how it plays out in hindsight, but let's see if the invalidation sticks. So the price is going to come back up eventually. It's going to give us a retest of the zone of supply. It front ran the first time around, rejected right after, very, very harsh. Trading in a very choppy zone. So we know it's going to sweep liquidity to the upside. So you get good confidence to take a short if we do get a fill on this position as well. We're going to sweep the high end of this range that we've been chopping around for a little bit, and we're going to test supply right there. Beautiful. So what happens here? We get a full test of supply. So we have a full position. Not one bid was missed on this supply tap. And we sliced through the supply zone, but we have our invalidation intact. So what happened there? We sliced through about just under a percent, about a 0.7, maybe a little bit less percent out of that supply zone. Then we rejected right after. This is a beautiful play. The supply zone was invalidated, but the supply zone is still intact. And it's good to look at your candle closures for this viewpoint, because we might slice through sometimes. That's the whole point of you putting your stop loss, right? And the problem sometimes with putting a hard stop is you might get the closure below your supply zone with a wick that slices out of the zone. The price isn't volatile, in my opinion, enough to do it within this part of the market, but it can happen. It can happen where the price swings above your invalidation and still closes below the supply zone, confirming just, let's say, like a liquidity grab. But this one played out beautifully, kept our stop loss, retested that supply beautifully, all our bids, and now we're going to be in phenomenal profit just by that play. Just stress-free trading. Absolute stress-free trading. We have our bids set. We know what we're looking for. We have our alert in place, and we know when the zone test. We have our TP right here hit at these wicks, and now you just hold the moon back for the rest. Just a beautiful example of supply. Okay, guys, so I just want to really quickly scroll through just a random chart. I already taught you guys how to seek the supply zone, how you would play it. Just from a few examples with the E chart. I just want to scroll through a random alt and just kind of look for a supply zone, just see what would have happened and how you would have played it really. So ENS was moving down here, just a straight move down, and then eventually it printed that supply zone right there. All right, we get, say, over here. This is great confluence. So we got the range break right here of these lows. Beautiful. We're consolidating below the range break. We printed supply right up here. So you get that move down, followed by a little bit of support to hold the price up. And then the move directly after that, down. You're going to have smallest bids to the bottom, in the middle, heaviest to the top. And you're going to just wait for the price to come back up and retest. Shop around here, consolidate below the zone, come back up, fill all our bids perfectly, almost picture perfect. Then it's going to reject right after. So we're going to have our fills, move our stops, and just allow the price to develop, do its thing. You see it almost came up to retest one more time, prints a lower high, and now the play is going to play out. Just absolutely perfectly. Absolutely picture perfect. So with that 3% risk, you're about 24% in profit. Obviously, you're going to take profit on that drop down. It's going to come back up, print that lower high, move back down. You're going to have a position, break even, stops in profit, however you manage your play. You're going to get a lower high, lower high, lower high, and then a breakdown, consolidation below the low. Confirm your breakdown, and then it's going to keep going. And that's just a picture perfect example of supply. Tying in other confluences, guys. Tie in your other confluences if you have to, right? Because you have supply all up in this level. So you're going to bid this supply, you're going to bid this supply, you're going to bid this supply. This is just a good example of allowing your plays to play out, seeking a specific zone, and evaluating price before it even happens, envisioning the price action before it happens. We assumed a deviation of flip above. It literally filled us to picture perfection. So anybody trying to long the flip of these lows, trapped, immediately shot back down. Immediately shot back down. Hey guys, so we went over how to seek supply and how I would play it the way that I do it, right? Any question you have, make sure to leave it in the comment section down below. Make sure you like, share, and subscribe. If you want to support my refs, they are going to be in the description down below, and my Twitter as well if you're not already following there, which you should be. Yeah, guys, we're going until the next one. Peace.